This will be an updated review on VDY, Vanguard's Canadian High Dividend Yield Index ETF. In the last year, VDY has come down from $47 Canadian all the way down to $40 Canadian. And I'll be discussing some holdings and some of the characteristics of this type of security. Some quick facts about VDY. The management fee is currently 0.2%. Management expense ratio of 0.22%, so very similar to each other. They pay monthly distributions, and I believe, yeah, right here, 4.35% monthly dividend yield. So they pay about between 10 and 20 cents per month per share. So this will be able, you'll get monthly income from this type of fund. They have 1.93 billion assets under management, so it is not a small fund, but it's also not a very large fund either. It's a decently sized fund for the Canadian market. I did do a review of VDY from a couple years ago, and I believe the overview and fund highlights are very similar, but I will go over them again. Vanguard Canadian High Dividend Yield Index ETF seeks to track, to the extent reasonably possible and before fees and expenses, the performance of a broad Canadian equity index that measures the investment return of common stocks of Canadian companies that are characterized by high dividend yield. So I will be going over some of the holdings, but this includes utilities, some energy, and many financial. So some of the fund highlights. VDY seeks to track the performance of the Canadian High Dividend Yield Index, like we said before fees and expenses, and the fees are 0.22% of management expense ratio. VDY employs a passively managed, full replicated index strategy to provide exposure to Canadian large, mid, and small cap stocks diversified across all industries. VDY uses efficient, cost-effective index management techniques. They want to track the performance of the Canadian High Dividend Yield Index, and the management team is Vanguard Equity Index Group. So that's just for clarity and some transparency for who is managing this type of fund. So the performance, I think this is a interesting area to look at. I don't want to base the quality of this fund on performance because there are many other things that go into the quality of the fund, like types of holdings, time horizons, types of securities, whether it's stocks, bonds, or private equities, that sort of thing. But in general, so in summary, the performance of this fund since inception has returned about 4.5% per year. The benchmark is 4.26, so that is very similar to their expense ratio being deducted on their market price. So this fund has been doing exactly what it's intended to do. The 10-year return, very similar, 8.9%. 5-year return, 10%. 3-year return, 13.9%. And the 1-year return is negative 2.38. So, I think this is a decent area to look at. I don't want to base a lot of things off of, I don't want to base the quality off of this type of analysis, but the return of this fund over the last 10 plus years has been about 9.5% per year. Some of the cumulative returns, so VDY since inception has returned 154%, and that is slightly conservative compared to the market during that period. The S&P 500 was returning over 10% since 2010 about. So it's a conservative play, but it's reasonable for the Canadian market. So the portfolio consists of 47 stocks. The benchmark is also 47 stocks. The median market cap is 80 billion, and it really does match the benchmark very nicely all the way down from price to book ratio, price to earnings ratio, because it is holding the identical number of stocks and the weighting as well. The earnings growth rate is 7.5%, and that is interesting because that is what lots of stocks base their growth capital appreciation on, is the earnings growth rate. And there is 4% yield on lots of these companies, so we can get a little bit of an idea of how much return is coming from capital appreciation and other returns coming from dividend payouts and dividend growths. This fund holds majority in large cap. 93% of the fund is in large cap stocks, 1% in medium large, 2.5% in medium, 1.7% in medium small, and 1.5% in small cap. So lots of the companies are large cap. I know that they hold TD Bank, Fortis, TELUS, some of these larger companies in Canada, and that allows them to kind of maintain their status as a high dividend payer. region exposure, this is 100% in North America, and precisely this is 100% in Canada if you want to be more technical about it. This is a Canadian index, and it holds Canadian stocks in it. So here's the weighted exposure with the sectors. The weighted exposure is how much of the fund is allocated to a particular industry. So for example, the financials is maybe a company like RBC, Royal Bank, or TD Bank, and 56.5% of the fund is allocated to those types of companies, and that matches right up with the benchmark. Energy is 26%. This would be companies like Fortis, Enbridge, those types of companies. Telecoms, like I said, it might be Shaw or TELUS and Rogers, depending on what happens with Shaw and that sort of stuff. 8.8% in telecoms. Utilities is 5.4%. That goes a little bit hand in hand with energy, but slightly different as they are the distributors of the energy. Consumer discretionary, 2.1%. That could be companies like Loblaws in Canada. They or the owners of Shoppers Drug Mart and No Frills. So there's a lot less companies in the consumer discretionary in Canada. So Loblaws is one of the bigger ones of that sort. Alimentation Couche-Tard might be one of these as well, which I do hold in my portfolio. Basic materials is 0.6%, and this is where it gets really small in the fund, and might not matter as much. But you just really need to know that the majority of the fund is in financials and energy, and a little bit in telecoms as well. So here are some of the holdings. Like I said, Royal Bank and TD are two of the top holdings in this ETF, and that consists of 56% of the portfolio. So if we just go down the list here a little bit, Royal Bank consists of 14.6% of the ETF, Toronto Dominion Bank is 12.4%, Enbridge is 7.8%, and Bank of Montreal. So if we just look at these companies here, we have financials, financial, energy, financial, energy, financial, energy, right? So that's is what I mean about the allocation of the sectors. Majority of these companies are very large in Canada, and they hold very large weightings in this fund, in this ETF. So this is the types of companies that are being held in this ETF. If you want to get particular about what is being held, and if you already hold these companies, or if you hold funds and ETFs that also hold and you don't want that crossover happening in your portfolio. So to get into the price and distributions of this ETF, this is a high dividend yield index ETF. So part of the returns do come back as distributions over time, and they are paid right into your brokerage account, and they will fluctuate month to month because of some of the holdings pay quarterly, some of the holdings pay monthly, and also they don't pay at the same time in the same months. So for example, TD Bank might pay their quarterly dividend in April, and Bank of Nova Scotia might pay their quarterly dividend in like March, in this month, March. So when VDY receives that payment from those companies, they have to distribute them the month that they get them. That's why the distribution fluctuations happen from time to time. So some of the distributions that you will receive from this type of ETF, so the 12-month trailing yield is 4.35%, and the current yield is 4.8%. This tells me that either the dividend has increased compared to the price, or the price has decreased compared to the dividend. So in this case, the price actually has depreciated, but the dividends have been very, very stable. So that's why you see this higher yield as of right now. And like I said, it's a monthly payer, so you will receive payments and distributions every month. The type of payments and distributions you'll receive, we'll take a look here. In March, there was a 17-cent payout per unit, and in February, it was 17 cents. So those 2 months aren't very different. But if you go down to December and January here, we have a 14.8-cent payout per unit, and that will fluctuate from month to month. But if we just scroll down here and look at the past months, they can range from 21 cents to 11 or 12 cents. So that's it can change 50% from month to month. But you have to remember that in the end, after one whole year, you're going to be paid the 4.8% distribution yield if you hold it throughout that whole period. So that's the average distribution of the whole ETF, and that's what they pay out after fees and expenses. if we just take a look at the Vanguard fact sheet, this will tell us a lot of the same things, right? It breaks it down a little bit better because you can see more of them side by side. You can see the sector weighting over here. You can see the ETF characteristics and the number of holdings and types of holdings, exact types of holdings over here in the top 10 holdings here. So if you want to find out what ETFs you want to hold, check out the fact sheet. This is some of the best stuff to look for when you are trying to find out if a particular ETF is what you want. And remember, I am not a financial advisor, so nothing on this video should be taken as financial advice. I'm just stating the facts that I observe from some of these ETFs. If you want to seek out financial advice, seek out a financial advisor, and they'll help you narrow in your financial goals and maximize your returns over the long term. Thanks for watching.